Hi everybody, Thomas here. Today I'm going to explain 4 of the biggest reasons that experienced and sophisticated investors make sure to include dividend-paying stocks in their investing systems. Now, these reasons are simple, but they're also generally ignored not only by the investing public at large, but also by most financial advisors and so-called experts in market media, who really tend to focus only on growth-oriented strategies. That puts average investors like you and me at a completely unnecessary disadvantage that I want to give you the tools to do something about on your own. Just a little bit of background on myself. I've been investing in the stock market for most of my adult life. I survived the dot-com crash of 2000, the Great Recession of 2008, and the pandemic-driven market crash of early 2020. I've published what I've learned over those years in my book, A Trade for All Seasons. And I've taught thousands of people the same principles I'm talking about in this video. The first reason that you should make sure to include dividend-paying stocks in your investments is simply passive income. Traditional investing strategies generally ignore dividends altogether. The same is true of traditional short-term trading strategies that focus on equity options, since buying and selling call or put options on a stock rarely translates to actual ownership of that stock. Dividends are really the low-hanging fruit of the stock market. They're the easiest income you can earn, since all you really need to do is to hold on to the shares of a dividend-paying stock to receive them. They get deposited as cash in your account whenever they're paid, and you're free to do whatever you want with that money once you have it. With some of the most recognizable names in the stock market offering dividend yields that compete favorably with bonds, dividend-paying stocks can act as superior investing alternatives to bonds, because owning a stock adds the potential for long-term gains if the stock increases in price over time. That goes along with the passive income that comes through those quarterly dividend payouts. The fact of the matter is that on a historical basis, dividends have always made up a significant piece of the overall returns the stock market has achieved, and that's been true for decades. The average dividend yield for all stocks that make up the S&P 500 for the last 25 years is a little over 2%. Over the same period, the index itself has returned an average of about 11.3% per year. That includes the return from dividend distributions. Now, if you take dividends out of that equation, that annual return for the S&P 500 actually drops to a little over 9%. What does the difference mean in real dollars? Including dividends, $1 invested in January 1990 in the S&P 500 would have grown to about $10 today. Without dividends, however, it would only grow to about $6. Now, that's a 40% difference over the last 25 years. It's one of the biggest reasons that dividends are the first reason they should be included as part of your investing plan. Reason number 2 is that dividend-paying stocks simplify the analysis process. With more than 15,000 publicly listed stocks on U.S. exchanges, one of the practical challenges every investor has to face is where to start. I've learned through my experience that dividends provide a useful filtering tool. As of my latest survey of the market, just conducted this month in October of 2023, only about 15% of all publicly listed stocks actually offer a dividend yield between 1 and 5%. That fact immediately simplifies the starting point for my stock analysis. Now, average investors tend to underestimate the huge impact dividends have on stock market profits over time. The truth is that from 1980 to 2019, 75% of the returns of the S&P 500 came from dividends. This means that the inclusion of dividend payments made up the majority of what stock investors have realized in return on investment, as compared to what the returns would have been without dividend payments. Just as the impact of dividends on total return on investment is often overlooked by investors, so too is the fact that dividends provide a helpful point of analysis in equity evaluation and stock selection. Most financial metrics used in stock analysis depend on figures obtained from companies' financial statements, earnings per share, those kinds of things. While a company's financial statements provide useful information, and I rely on a lot of that information for my analysis, which I've shown you here, the potential pitfall of evaluating stocks solely based on that information is that companies can and sometimes do, unfortunately, manipulate their financial statements through misleading accounting practices so they can present a more favorable picture to investors. Dividends, however, offer a solid indication of whether a company is performing well simply because a company has to have real positive cash flow to maintain dividend payments over time. Examining a company's current and historical dividend payout provides an excellent reference point for a company's basic fundamental strength. Seeing a consistent pattern of stable dividends over time, or even better, increasing dividend payments, is a clear indication that a company is steadily generating profits and is therefore less likely to have its basic financial health threatened by temporary market or economic downturns. Reason number 3 to include dividends is that they help to reduce risk. Dividends can be a major factor in reducing overall portfolio risk and volatility because the payments that come to you from dividends mitigate losses that occur from a decline in a stock's price. Beyond that simple fact, studies have also shown and proven that dividend stocks on a historical basis outperform non-dividend paying stocks during bear market periods. Now, it's true that in an overall down market, stocks across the board will also generally go down. Dividend-paying stocks typically suffer significantly less decline in value than non-dividend-paying stocks. That makes it easier for them to recover when the market returns to bull market conditions. The final reason that dividends are so important is because they are also helpful in another important way that too many people fail to recognize, and that's the effect of inflation on investment returns. For an investor to realize any genuine net gain from an investment, first, it's got to provide enough return to overcome the loss of purchasing power that comes from inflation. Now think about this. If an investor owns a stock that increases in price by 3% over the course of a year, but inflation is at 4%, then in terms of the purchasing power of their capital, the investors actually suffered a 1% loss. However, if the same stock that increased 3% in price also offers a 3% dividend yield, the investment will successfully return a profit over the same period that outpaces inflation and represents an actual gain in purchasing power for that investor. Here's some real facts. Up to the end of 2022, inflation in the US has averaged about 2.5% per year, while the average dividend yield for stocks in the S&P 500 index is about 1.9%. That means that dividends on average haven't exactly matched the pace of inflation, but they have been close enough to make bull market periods more productive in increasing purchasing power over the long term. Even better news is the fact that for many dividend-paying stocks, dividend yields can be found well above that modest 1.9% average, which allows them to easily outpace inflation all by themselves. The simple fact is that dividend-paying stocks represent an unappreciated way to find profitable, long-term targets of opportunity. I've built my Rebel income system to use dividend-paying stocks as a primary piece of my income generating system. Thanks for your time. I hope you found this video to be useful. Check out this video to learn more about all of the elements of my Rebel income system. If you subscribe to my channel over here, you'll get notified about each new video I add, including current analysis of different stocks each week. If you'd like to receive alerts to my weekly trades, you can sign up at rebelincome.com. You can see that link down in the description for this video. Again, thanks for your time. Talk to you again soon.